Hello my friends and welcome to the Electric Viking. Thank you for watching and subscribing to the channel. Really stoked to see the support, and to be honest, I did not expect to have this many subscribers and for the channel to just be taking off in this way only a few months after I began the channel. So thank you. Hope you've had an awesome day as well. I mean, hey, why not have an awesome day if you can? Now, many comments in many of my videos show a certain naivety for what is really going on in China. I'd like to remind you that China has taken away much of the manufacturing base of the West already. There's really only two areas left for China to take, and those are the two largest areas of industry in the world: automotive and energy. Now, as you know, probably, if you've been watching my channel, China has the first and fourth largest battery companies in the world and a number of others. CATL number 1, BYD number 4. Now, I personally think it's very likely BYD will become one of the world's 3 largest automakers by 2030. And I think the Chinese government wants that to happen. I think, you already know, CATL is the world's largest battery manufacturer, and considering the fact that they just happen to luck into the battery technology of the future, lithium iron phosphate, which even Elon Musk has said will be the lithium technology, the battery technology of the future, I think it's safe to say CATL will maintain their leadership as the world's largest battery company, and if anything, extend that leadership. Now, what is this video about? It's about the naivety of many of you believing that China is this communist socialist place that really doesn't know what they're doing. Well, I want to remind you of the fact that China, like I said, has taken over much of the world's industrial base already, and there's only 2 areas left for them to take over. They happen to be the 2 largest areas of industry in the world. Now, to get an understanding of what's really going on in China, the way that the Chinese government operates, the way that the economy operates, and just what China has been able to do over the last decade, I'm going to share with you an article called "Americans Don't Know How Capitalist China Is." This was an interview with Weijian Shan by Adi Ignatius, and it comes from the Harvard Business Review. Weijian Shan was born in China and had his life upended by the Cultural Revolution. Educated in the United States, he worked for the World Bank and JP Morgan and taught at the Wharton School. Today, he is the CEO of PAG, a $40 billion private equity firm based in Hong Kong. In this interview, he talks about the accessibility of the Chinese market, America's demonization of China, what the Chinese don't understand about the US, and more. Now, Weijian Shan understands the delicate US-China dynamic as well as anyone. He was born in China and his life was upended during the Cultural Revolution when he was sent off to do farm labor in the Gobi Desert. Eventually, he came to the United States where he earned a master's and a PhD at UC Berkeley. He worked for the World Bank and JP Morgan, and he taught at the Wharton School of Business. A candid observer of Asian society and business, Shan is the author of Out of the Gobi, My Story of China and America, and the newly published Money Games, the inside story of how American dealmakers saved Korea's most iconic bank. Now CEO of the Hong Kong-based $40 billion private equity firm PAG, Shan spoke with HBR Editor-in-Chief Adi Ignatius about the economic prospects for China and the United States. HBR. China's economy seems to be the healthiest in the world at the moment. Does that create new investment opportunities? Shan. Despite initial blunders, China has handled the coronavirus pandemic well through strict lockdowns and mass testing. Its GDP dropped 6.8% in the first quarter of 2020, as is to be expected, but resumed growth from the second quarter onwards. China has been shifting away from an investment-driven growth model to one led by private consumption. A decade ago, its retail goods market was about $1.8 trillion, less than half that of the United States. In 2019, that market reached $6 trillion, surpassing the US level of 5.5 trillion. So in other words, it's well over tripled. Even now, China's private consumption represents only 39% of its GDP, way below the US level of 68% and the world average of 63%. And that leaves much room for growth and many opportunities for investors, particularly in businesses that cater to consumers. Investors have always been enticed by China's vast market. How accessible is it these days? Our firm, PAG, invests throughout Asia and occasionally beyond. China is the only major economy that requires no special approval for foreign direct investments, although some sectors, such as lived change media and the internet, are on a negative list that restricts them. However, there are usually lawful ways to get around that. PAG invested about $100 million in a digital music business in China a few years back, which subsequently merged with a similar business and changed its name to Tencent Music Entertainment. Today, it's traded on the New York Stock Exchange with a market cap of $45 billion and has more than 800 million unique active users. The name of the game in China is scale. If a business is successful, it's usually open to taking outside capital so that it can quickly expand nationwide. And that is why China is the most active private equity market in Asia. Trade wars, nationalism, and the pandemic have led many companies to question their supply chain strategy, in particular, basing manufacturing in China, thousands of miles from their markets. Are you seeing a significant shift in supply chains out of China? Some manufacturing has been relocated away from China since the trade war with the US began in 2018, but that hasn't made a dent in either China's exports or America's trade deficit. In fact, the pandemic has made the world more dependent on Chinese exports, which grew by 21% in November over the previous year. The point is that a China-based supply chain has proved a blessing, not a curse in this pandemic. Any shift in supply chains will be gradual and partial because it's very costly to move from the cost-efficient supplier to the second or the third best. American companies will do so only if US tariffs become more penalizing than moving would be. Also, while it's relatively easy to shift the sourcing of a low value added product from China to Vietnam or Mexico, how can you move an entire supply chain with many indigenous players? And what if the market itself is in China? GM sells more cars in China than in the United States, Canada, and Mexico combined. I'm going to repeat that. General Motors sells more cars in China than in the US, Canada, and Mexico combined. Where can it move its production if the target market is China? China is also Apple's biggest market for iPhones. It has about twice as many iPhone users as the United States does. The US continues to vilify China, and China does itself no favors with its poor policy on human rights. How can outside investors ensure that they don't become collateral damage in a bigger political and economic war? Both countries have human rights issues, although in different forms. Investors anywhere should invest in a socially responsible way to advance human rights, adhering to a high standard for labor practices, gender equality, investment in human capital, and charitable contributions. Wherever PAG operates, we adhere to the same environmental, social, and governance policies. The Trump administration was determined to damage China's economy and businesses. Does the US even have the power to hurt China economically? Here and there, yes, but not in a meaningful way in general, in my opinion, and not without harm to itself. Trump's trade war was an abject failure. Its stated purpose was to reduce America's trade deficit. In November 2020, China's trade surplus with the US was 70% greater than it had been in January 2017, when Donald Trump took office. Meanwhile, American consumers have paid for the higher tariffs because the average prices of Chinese exports haven't decreased. China's GDP is forecast to grow 7 to 8% in 2021. That means that despite the trade war, the technology war, and the capital war, China's GDP will most likely be 10% bigger in 2022 than it was in 2019. Whereas the US economy will probably be only recovered to 2019 levels by 2022, according to the International Monetary Fund. It seems that the only country that can stifle China's growth is China itself. If it makes major policy mistakes, and only the US can threaten America's economic supremacy by underinvesting in its own infrastructure and by limiting trade. Now, I believe a significant mistake the United States has made is by underinvesting in the electric revolution. When I say the electric revolution, what I mean is batteries for energy storage, batteries for electric vehicles, solar, wind, and in the many other parts that make up electric cars, motors, e-axles, semiconductor chips, battery cells, and so on. Now, back to the article. What are the dangers in America's continued demonization of China? Much of Donald Trump's rhetoric and his actions on China were meant to deflect attention from his leadership failures at home, such as neglecting his duty to protect the public from the coronavirus. With less than a quarter of China's population, America has a death toll about 100 times China's and counting. Now, I'm not sure those statistics are correct. In fact, I would say very likely they're not. But anyway, the United States had maintained a fairly consistent foreign policy until Trump. The Biden administration is expected to restore that policy and to work within the rules of international institutions, which I expect will diffuse tensions. When Nixon first visited China in 1972, the differences between the two countries was vast in political and economic systems and, of course, in ideology. Yet they found common ground to work in mutually beneficial ways. Today, the differences are arguably a lot smaller, and there are many areas in which the two can benefit from cooperation. After all, each is the other's largest trading partner. And China has lent more than $1 trillion into the US government by holding US Treasury bills. Let's be honest, a rising China may be a threat to America's economic and technological supremacy, but not to its national security, because China doesn't export its ideology or political system and doesn't seek regime change anywhere in the world. But it won't back off from its territorial claims, all of which predate the People's Republic of China. The real danger is the Taiwan issue. If the US abandons the One China policy and supports Taiwan's independence, conflict will be inevitable, with unimaginable consequences for the world market. Is a China-US decoupling a real possibility? Not completely, and not without extremely high costs. The technology war waged by the Trump administration forced China to develop critical technologies such as semiconductor chips in its own market, for which it has previously relied on US suppliers. It will take years, if not decades, for China to catch up in some areas at great cost. But the technology war also hurts US suppliers. The top 10 American semiconductor chip makers sell about 3 times as much in China as in the United States. Losing in the China market will be costly, extremely costly for American tech companies, and deprive them of funds for further R&D. What are the biggest risks for China's economy in the coming years? China's economy has grown 36-fold over the past 3 decades. 36-fold. Chiefly because of market-oriented reforms that have created a vibrant private sector which now accounts for about 2/3 of China's GDP. But the state-owned sector remains too big and it's inefficient. Great challenges lie ahead. China's savings rate will drop significantly as its population ages, and investment will slow. The country will need to continue to reform and privatize its state-owned firms and shift from investment to private consumption, or it will not be able to sustain its growth. Are you concerned about China's debt? I see no systemic risk either in China's banking system or in its economy. Pundits tend to be alarmed by default here and there, such as that of Evergrande recently, but defaults and bankruptcies are common in a market economy. Only a sudden surge of such events would herald an economic crisis. In 2020, a year of severe difficulties all over the world, there was no significant increase in Chinese corporation defaults. In fact, China is the only G20 country to have posted positive growth in 2020. Its monetary policy is reasonably tight, with the yield on government bonds about 3.5 times that on US Treasuries. Its currency appreciated 6% against the dollar last year. All these testify to the strength of the Chinese economy. What is it that Americans don't understand about China? They don't know how capitalist China is. China's rapid growth It is the result of its embrace of a China. They don't know how capitalist China is. China's rapid economic growth is the result of its embrace of a market economy and of private enterprise. China is among the most open markets in the world. It is the largest trading nation and also the largest recipient of foreign direct investment, surpassing the United States in this area in 2020. The major focus of government expenditure is domestic infrastructure. China now has better highways, rail systems, bridges, and airports than the United States does. For example, over the past 15 years, it has built the longest high-speed rail system in the world at 22,000 miles long. It is twice as long as the rest of the world's high-speed rail lines combined. China's high-speed rail could cover the distance between Boston and Chicago in only 4 hours, whereas Amtrak's fastest service takes 22 hours. One reason China can spend so much on infrastructure is that its defense budget, after years of increases, is still only 1/4 of the United States. And what is it that the Chinese don't understand about the United States? They don't know how socialist it is, with its social security system and its policies to tax the rich by collecting capital gains taxes. China is still in the process of building a social safety net that is largely undefined and underfunded. It has no tax on personal capital gains. In 2020, China had more billionaires than the US did, and it outpaces the US 3-1 in minting them. Consequently, inequality is far greater in China than in the United States, measured by the Gini coefficient. Now, my take on this is that capitalist competition in China is intense. It's insane. It's challenging. It's tough. It destroys the weak quickly, more quickly than any other place in the world. That, I think, people just do not realize. Now, there are literally thousands of companies that supply the electric car market in China. There are hundreds of electric car brands, and the weak ones get weeded out pretty quickly. The more you research this market, the more you realize there is intense competition, and this is making the strong stronger and the weak weaker. Pretty quickly, those weak die off. Pretty quickly, those strong become even stronger. Now those strong companies are about to take over by moving to the West, where I believe they will face less stiff competition than people realize. I believe that fighting for business in China is harder than it will be for them to fight for business in the West. And that is why, well, that is one of many reasons that disruption by Chinese companies in the West will be far, far quicker and far deadlier than anyone currently realizes. Thank you for watching the video. I'll see you on the next one. Bye-bye.